Hey, what's going on, everybody? Reed Schweizer with the Stero Developments with a special guest today. I've got Aaron Chapman here. Aaron is one of our preferred lenders, and just wanted to kind of really shoot the shit today about what's going on with interest rates, what's going on in the housing market in general. Especially when it pertains to investment quality housing. So, Aaron, thanks for being here today, buddy.
Even
So, everybody wants to know what's going on with rates, what's gonna happen with rates, what do you think is gonna happen? I mean, you put out a lot of content with charts and graphs but let's just simplify. What's going on?
it's the prevailing conversation is what's going to go on happen. Where's rates going to be? Everybody says they're going to come down soon, and they've already anticipated they would go down, and they did go down off of their peak. But I personally don't know that we're going to get much better unless the Fed starts to do what they penned as quantitative easing back in 2008. So that was back when you had Ben Bernanke and you had Hank Paulson uh, got together after the crash, sat down with the banks, and then they decided they were going to with the Treasury, they were going to pull in capital into the Fed, take that money, invest into both the Treasury bonds and the mortgage-backed securities and corporate bonds, and stimulate the economy that way. Well, then we got this big shot of capital going in there on the regular basis to the point bringing rates really, really low. So what happened after that is you get this new generation of realtor, a new generation of real estate seller, real estate guru, real estate entrepreneur that believed that interest rates down in low single digits was a norm.
Yeah, it's
And
always supposed to be 3%, 4%,
they thought that this was, well, the economy's in cycles, right? It's 5-year cycles, but we never had a cycle that included 13 years of quantitative easing. So to get to the description here, guys, who understand that when we had 2008 crash, there's a lot of you probably listening that weren't even remotely thinking about real estate in 2008. I've been at this since 1997. I saw the dot-com bubble and I saw a couple other things happen. Then you get to 2008. 2008 was a time that was created by money being way too easy to get. You could do zero down investment purchases by not even declaring your income.
Yeah,
So
when
if
your
money,
pizza guy shows up at your house and he delivers you a pizza and he says he just bought three houses with $500 down a piece, you know something's about to go sideways.
exactly. In fact, if you want to understand the background on this stuff, go watch the movie The Big Short. Now, do it
Oh,
when the kids aren't in the room. There's a lot of language or whatever else. But what's interesting as I did notice who they portrayed as the real estate investor in there. Because when you start looking at the thought process of the investor, as somebody that has multiple different properties at once, right?
mhm.
Well, the real estate investor in this was portrayed as a stripper.
Yeah.
And that gives you the idea of what they thought of people buying houses if they put that person as the real estate investor in the movie,
Mhm.
because they didn't think people were all that smart taking advantage of the system. Well, when we think about that, they wanted to blame banks, right? Well, they created this or so and so created it. No, it was a demand. When somebody demands something, you're going to fulfill that. Well, we as humans demand everything to be easier, cheaper, and just to be given to us all the time. So as a result of that, have a situation where they created this need for this type of money, and people took that kind of money and they bought houses like crazy. What we had was a time that people could sell a house for a lot more the next week because of the fact that money was so easy to get, as we're going up rather fast. Well, then it got to a point where that money finally got to a point where things just dried up and there was way too much inventory. Nobody can get their hands on it because the foreclosures were mounting.
Yep.
And next thing you know, it all froze. Now, what's really interesting about that,
Although,
prices of
let me
housing,
say this, I did really, really like buying nice single family houses for 60,000. That was a fun time.
it was a great time after the crash. Prior to that crash, right, you had everything just coming down. What's interesting about that whole time, this is what I want real estate investors right now to listen to and really pay attention to, rents went up.
Mhm.
The price of housing drops dramatically. You could pick up what was a $500,000 house for 100 grand. And
Mhm.
I'm not kidding. I'm in Arizona. That took one of the biggest beatings.
Well,
My house
Arizona and
appraised.
Florida and Vegas got wrecked.
Yeah, the house I was living at the time, I had that appraisal, I believe, is 750,000. The year, I think it's 2 years after that, I had to deal with not really a short sale, but a renegotiation on the rate. It appraised for 150.
Yeah.
It was on an acre and a quarter. It was a 2,200 square foot house with a 1,500 square foot shop. There's no reason it would appraise for that, but that was the nature of what happened. So, like you said, it was great because people come in and start buying houses really cheap. But back to my point, the rent still went up. Why did they go up? People lost their houses. You had sheriff's department dragging people out and throwing their shit in the street. Where were they going to go? They had to rent something. So the rental demand went through the roof. Next thing you know, the cost of renting went up. So just know that rents keep going up regardless of what's going on in the market. So your ones here, they're thinking like, well, if the rent, if the market's going to crash, I don't know they want to be holding real estate. We just saw the worst crash ever, and people holding real estate were still able to make their payments. So don't worry about that kind of stuff. Rents are going to keep going up. So back into where are they going right now, and why do we think they're headed that way? I'm going to show you guys something, and we're going to get into some other economic data here in a minute. I'm going to show you this chart that Reed's talking about. This is the charts that I stare at all the time. This is the mortgage-backed securities chart. And what this shows you is the daily trading of that security. So the money going into it or out of it. If it's a green day like this, I hate that band, by the way. But if it goes in here, that means money started here and it flowed in all the way to this upper part of the square. This is called a Japanese candlestick. And then it fell back down to this point, and that was where it stopped. Money flowed into it, bringing capital into it, giving more to lend. Therefore, the prices went down, rates went down. When it's a red day, meaning it started higher and it traded down lower to its lowest point, and then it settled into where it settled where the wide body of that red candle is, and that's where it sold out and stopped its trading. So it was a down day. Money left, therefore costs went up. What I'm showing you today, and I'll do a zoom out on this, so we can really look at this and understand what I'm staring at and why I'm staring at it. I'm going to close that out. It's the stochastic chart. I'm not going to even get into that on this conversation. So right here, in fact, oh, interesting. I can't even show it anymore. Right here in August, we've got a point right there. This yellow line I've drawn here, it was November 25th of 2008. There's a reason why August pops in my head of 2008. I'll share that in a minute. But November 25th, 2008 is when they announced the term quantitative easing to the world. That's when the Fed says we're going to start quantitative easing, which is we're going to invest U.S. Treasury capital into the markets, bonds, treasuries, and MBSs. So when they did that, right here is when all the other investors said, we're jumping in, and they jumped in, and they kept jumping in. Now, this line represents the day that the Fed actually started the quantitative easing, which is January 1st, 2009. They invested $1.25 trillion by the end of March 2010. So basically $1 trillion in a year.
So basically they came in and they bought mortgages, correct?
They bought mortgages. They put the money into these pools for us to be able to lend out so people can get lower interest rates to spur the economy. Now look at this the reason I drew that is to, okay, what was the market doing prior to that day? So I can't go further back, but when I did finally figure this out and I looked at it, all the market was lower, except for a couple times it bumped up above it, but the market was lower than this price point prior to the Fed announcing quantitative easing. So then you have the Fed actually going into quantitative easing. And if you look here, we've stayed well above that line all the way up until October of 2021. That's when they announced what they call quantitative tightening. When they announced quantitative tightening, everything fell off.
We essentially got artificially low rates for a while.
Artificially low rates. Because now, if the Fed's not putting in trillions of dollars, what's going to happen? Now, the market has to maintain this. Well, the market's not maintaining it. It fell off. And it bottomed out in October of this last year. That's where it found its bottom. And that bottom was equivalent to where the interest rates were back in 1996. So we had our highest rates that we'd ever seen since 1996, just this last year. What do I find very interesting about this? Now, this trading channel, I drew this because I could map out how the trades were going to happen. So there's enough bad news to take it all the way out of that trading channel to the lowest point we'd seen since 1996, meaning the highest interest rates we'd seen since 1996. And what I find interesting about that, when rates go up, prices usually go down. But last year, between Case-Shiller, Black Knight, and CoreLogic, we've seen the price of housing go up, averaged over the United States of 8.9%. So that much of an increase in housing prices, even though rates went down. Why is that? It's because of the shortage of inventory. There's still a demand. People will still find a way to pay for housing. So we had that day that all turned around. And what happened? It started rocketing up. All the news coming out about jobs. Finally, the first time ever, the jobs report were very, very similar to reality. Instead of saying jobs are getting better, they're actually saying, actually, they're getting worse. The economy is getting worse. The worse the economy is, the better bonds do. So
Mhm.
what we started to see here is it's rocketing up. And where did it stop? Right there on the damn line that I had drawn over nearly a year before. And it keeps banging on that line, banging on that line, banging on that line. And where are we at today? We hit that line again yesterday and it pulled right back.
So,
Right.
so I mean, it sounds like what you're saying is like where we're at right now is probably where we're going to be, at least for the foreseeable future.
I believe we're going to be here or worse for
Yeah.
the foreseeable future. Now, some people say, but all these experts say rates are going to go down. Okay, I get what they're talking about, but not a single one of those damn experts is looking at that line or has even talked about that line. I'm the only one that I am aware of on the internet talking about this line is even looking at that. So
Mhm.
that tells me I believe that the market will only absorb anything below that. So the
Right.
market confidence into buying into mortgage-backed securities. But let's say I'm wrong. Let's say it drops a full percentage point. Right now, we're about, according to bankrate.com, about 6.99% for an owner occupied buyer. Let's say
Mhm.
it drops to 5.99% for an owner occupied buyer, right?
Right.
Just the average market. What's that going to do? Increase the buying power, right? What's that going to do? The price of houses, Reed? Push to the freaking roof.
Well, I mean, there's other economic factors, and you and I have talked about this when we weren't on this call right here is right now some of the biggest buyers are institutional buyers, and they're gobbling up single family homes. And what BlackRock, what I something like 44% of the houses last year were bought by institutional buyers. Am I right on
BlackRock,
that?
BlackRock, State Street, and Vanguard purchased approximately 44% of single family housing last year
Yeah.
in 2023. So, what does that tell me? This is my opinion, and you guys can decide whether it's correct or not, because I'm just throwing it as an opinion. There will come a time that single family housing will be the most expensive per square foot real estate on the planet. So,
Mhm.
what does that mean for you, the real estate investor? It's going to be priced at a point that you will not be able to afford it.
Yeah.
If 44% of it was taken up last year of all the sales capable that were put out there into the market, it is also stated that between somewhere between 2030 and 2035, these institutions, and Jeff Bezos created one this last year too,
Yeah.
will own over 60% of the available single family housing. So what does that create? It creates a subscription based economy for housing. It means you have to subscribe to live in a structure. Now, there's going to be two types of people out there: those who are going to subscribe, pay the monthly fee to live in it, and there's those who are going to offer the subscription that own it and offer it out. So
Yeah, you're
if
either going
you
to be an owner or a renter, and in 10 years, if you don't own real estate in 10 years, you're probably not going to be able to get it.
it's going to be completely out of your reach. So what we have right now, if interest rates go what they're going to do, if the Fed starts lowering rates, and I pray they don't, I pray that Powell has the balls to stand there and say it's staying where it is,
Yep.
right for right now. Why? Because if he drops rates too much too fast, we're going to have what I have heard referred to as a crash up, meaning things are going to get blessed up so high in value, price of housing, the stock market's going to go over 40,000 that the average person will not have it within reach to acquire. If you don't
Yep.
have it now, you will not be able to get it. What does that mean for your children and grandchildren? They're not going to have a shot at this at all. So
I
how
just
do we
talked with my
stop?
kids yesterday. I mean, listen, you got if you want something, get it now because it's not going to get cheaper. And you know what? Let's subtract or let's go back a year. You and I, we've known each other for several years, but a year ago, we had a housing shortage, not only nationwide, but obviously I'm in Southwest Florida. We have a housing shortage here. Um, and in the last year, what have we got? 2.5 million more people have came here. And
Not
what are they
more.
going to suck up? Well, that's how many we know about. They're
Yeah,
going
I
to
mean,
take that
they can only
lower
stay
end
in
real
tent. They
estate
can only
down.
stay in tents so long. They can only stay in converted high school gyms for so long.
Yep.
We had a shortage problem before they got here.
That's what I'm saying. Yeah, we had a shortage a year ago. Now we get 2.5. Basically, I don't know, the state of Wyoming, which I don't even know how many people they have, but we've had so many people come here that they're going to have to live somewhere. That we had a housing shortage before. It's worse now. I mean, it's difficult.
Compound.
Hmm. Yeah, it's
So
crazy.
not
And
only that, so it's saying, okay, we hate the fact that we have that going on. We hate a lot of stuff that's going on, especially when it's being fueled by people sitting in a government position that is literally. We can get into all kinds of stuff. We can get really, really political, and it's stupid for us. It shouldn't even be political, but it becomes
no,
that.
and
But
I'm not
ultimately,
going
how do you
politics. You
how do
can
you
be
stop
right,
it? Here's
left, or
what people
middle. It
say: How
doesn't
do you
matter.
stop it?
It is what it is.
The world's going to ask the question, Aaron, how do we stop this then? I can't grab my torch or my pitchforks. I can't go run into the street with my guns and do something about it, right? How do you stop it? By buying a house.
Yep.
And keep buying them as you can. Now, what I tell my kids right now, I'm buying them. And what I'm doing is I'm putting my kids in it to lease it back from our family trust. They will have ownership in it because of their beneficiary of the trust. They don't own the houses. They're not, I mean, my son in law has asked me, can I just buy the house from you? No, you don't understand how much better position you are right now to be leasing it from the trust and have the ability to occupy it in perpetuity as long as you want. You don't have to pay a huge down payment to get into it, right? So the thing here with me doing that is to ensure that the multi generations are going to have shot at something. I am not going to see the benefits of what I'm doing. I just won't. But my children will. My children's children definitely will. We have to think about this. Everybody talks about legacy being money. There's so damn many people out there right now. It's like, well, I got to say, I cut back here and here so I can say something for my kids when I die. They got to take care of their own damn selves.
Yeah.
So what I do is I get the infinite banking policy. I'll do that life insurance policy the whole life. I put money aside there. I have access to it to use for acquisition of property or whatever I want to do, build the family assets that way. I get to continue to use it as I need to. And then when I pass, I get this massive death benefit comes in to take care of them. I can literally, it's called life insurance. I get to live as a result of having this, not death insurance. It's
Yep.
not something that I'm insuring my death. I'm actually ensuring the fact that I get to live my life and still leave something more than what I have to my family. I set it up in a trust in a way that they can't just take it and just squander it. They have to do certain things. They're involved in the family meetings about it. They're involved in looking at the books and make sure everything's paid. So there's a way to do all this kind of stuff and make it work for you.
That's that's awesome. And one of the things that I want to highlight is, over the last 2 years, yeah, we've gone through some rate increases, but you touched on it. Prices really haven't changed. I'll talk about Southwest Florida. Yes, rates have gone up a couple points in the last couple of years, but we're actually up like 6 or 8% in pricing. So it's a supply demand thing. It's economics 101. If rates go up, but prices don't change, if rates go down, if you're one of those people like, oh, I'm waiting for rates to go down, well, that's great. Rates may go down, 0.5% or 1% in the next year. And if they do, whatever. But if rates go down, prices are going to go up. So to me,
Payment
the thing
require
to do
your
is
down
get
payment
the real
needs going to
estate
go up.
now.
Yep. Then you're going to need to have more down payment. You
Yep.
have to need more assets for reserves. You need all these things. Hey, Reed, do you remember back in 2021, 2000, basically 2020 and 21, when somebody's making an offer on a house and they had a real estate agent representation, they would tell them, "Hey, be prepared. You basically have to come in 30 to 40,000 over list with your first offer just to get in
With
the
an
game."
escalation clause. Like I'm willing to go to this.
Yep.
You know,
Yep.
the
Yeah.
house is
And then
listed at
what they're doing is they're going to look
540,
at
but
the seller's going to look at all the offers, say who's willing to go the highest on this house. In fact,
yep.
I had heard, I don't have the statistic, I've heard a statistic that during that window of time that over 20% of the sales, or nearly 20% of the sales, sold for over $100,000 over list.
Mm-hmm.
And why did they? Because demand was so high. Why was the demand so high? Because the rates were so cheap and people could afford so much. You didn't get the benefit of a low interest rate, guys. What you got was a more expensive freaking house that you still had a high payment on because you paid more for the damn house. You had a lower interest rate you could pay it with. We got to wrap our head around this shit. What I don't understand is how many people didn't get pissed off that they paid 100,000 over list. They're thinking, "Hey, I beat that other guy. He couldn't go that high." You wasted your freaking money. We pushed the price of housing above their actual value because of what the price point was going to be on a monthly payment. You
Yeah.
basically got sold like a car salesman sells you. What kind of payment do you want? And I'll put you in a car that you can afford payment wise, not what do you want to spend on a car.
That's exactly it. So, you and I could probably go on for hours about this. And, next time you're in Florida, we probably will over a cold frosty beer or something. But anyway, Aaron, if
Or
somebody
a
wants
couple
to talk to
dozen of
you,
them.
if somebody wants to talk to you, how do they get a hold of you?
You go to my website, aaronchapman.com. And honestly, guys, if you want to really get deep in the paint on this crap, just text me 602-291-3357. I'm the only son bitch out there that give you my personal cell phone. Text me 602-291-3357. If you're serious about wanting to do investment real estate and you seriously want to dig into this, talk to me. We'll get you figured out and we'll get you lined up. Because if you don't do it now, you ain't going to do it.
Yeah. Hey, man, thanks for joining us. And any of you, if you want to get a hold of me, you can like, share, subscribe to Aaron and I both. But my personal cell is 239-229-5948, Florida Realtor X at gmail.com. Reach out to us. If you want to talk about the financing side of it, you talk to Aaron. If you're looking for inventory, you need a cash flowing rental property. Because even with rates being a little wonky right now, guys, we're still positive cash flow here in Florida. There's still high demand for rentals. The rents are strong. They rent quick. So if you need something and you want something on the west coast of Florida, basically anywhere from Sarasota down through Naples, we've got new construction inventory, single family duplexes. We can do pretty much anything you need here. So Aaron, thanks again for being here, and I much appreciate your time, brother.
Thank you, Reed. And guys, when you text me, be sure to ask me why interest rates don't matter and why you should look at houses and not worry about the cash on cash return metric. You'll be surprised at why that's not so damn important. Everybody's trying to sell you on that as the reason to buy a house. That's not the reason. That was just an easy way to sell you. So appreciate you guys.
All right, thanks, guys. All right.